Hello, 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 everyone. Happy Wednesday. How is everyone doing today? PP numbers out mixed. Headline beat expectations, core missed. Not much of a reaction. Good morning, Davey. I think the market's now focusing on Friday. Hey, waka waka. Market went up on PPI, even though it is up on core, which means far worse. We'll talk about this in a second. Possible just fake out. I'm watching for the next rollover play. Good morning, Patrick. Hello, Connor. Dead cat bounce. Very well might happen. Watching a return to the longer term rotation zones. Hey, Christoph. Wondering, I forgot you were on vacation. Uh, Sorry your vacation's almost over. We'll be glad to have you back next week at full speed. Good morning, Josh. Uh, you gotta have a little bounce. Remember, markets need to go in both ways. Healthier if you get the nice little bounce. Hello, Lauren. All right. Let's get right to it. By the way, if you are new here, please do consider subscribing, ringing that bell, and hitting the like button. Longer term members, you know what to do. That's all I need to say on that. We have PPI again. The month over month came in as expected. Uh, the core came in a little hotter. So core, remember, X food and energy came in hotter than forecast. So the core not backing off yet. And you know the Fed watches the core numbers more than the headline numbers. Core PPI year over year still at 7.3%, down from previous but higher than forecast. And the headline PPI a little beat, 8.7 versus 8.8. And yeah, market little mixed reaction and now is back up watching for that bounce. EIA numbers coming in today. That's about it. Remember, we got stuff still going on the rest of the week, so we could still see some interesting, especially OPEX, which I was thinking was next week for some reason, but it's actually Friday. It's great when you lose time. Pretty mixed, although mega caps holding up. Interesting. I refreshed this about when PPI numbers came out, but I think it refreshes at the top of the hour, if I remember correctly, which is down like slightly, but still hovering with that 32%, but still baking in that 75 basis point. Really don't think we're going to see that 100 basis point move. Remember, we're still in negative gamma right around this critical area of 4,000 because of the expiration. Massive expiration on X. You can see the put gamma is massive. And as you get close to expiration, which is Friday, that gamma can really whip around and amplify the delta moves quickly, which makes hedging an absolute nightmare. So that's why I'm focused on that. Before the open, nothing much going on after the close. I'll just peek at light path. So that's about it. You can see here a little pausing bar, and I'll show you exactly what I mean with rotation zones catching up. But Jason, welcome. Thank you. I pray all is well with everyone this morning. All is fine here. Thank you for those well wishes and prayers. Looking at the left of the chart, we don't get the June low in a smooth motion. Again, I wouldn't want another follow through today like yesterday, because that gets it just too oversold too quickly. Although what I'm seeing from people I'm still talking to, I'll call it the general public, the thoughts after yesterday are you got to buy the bounce. You got to look. Apple got beat up. You got to buy it. You got to buy. Oh, I asked the question yesterday. You got to buy Tesla. You got to buy Amazon. You got to buy. It's all. This is just a bargain. You got to go buy them. We still have that mindset. Still the mindset. Long way off. We're going to have to take out June lows and really get down to probably this 3,500 level at least before it gives a wake-up call for more people. Remember, we closed yesterday below the 62 and a half. So probability-wise, we should at least see the retest of June lows, and what I mean by that is 39.20 to 38.84. Do I have an exact timing on that? No. We still have daily cycles rolling over and not near a bottom, so I am watching for the rollover play. I expect that there'll be a fair amount of buying pressure by the most recent lows in June. That line's going to be defended pretty hard. And we still got that magnet overhead right now trading 39.61. That magnet is still right around 4,000. Where does that take us in terms of rotation zones? That takes us back into the 4-hour rotation zone. You do have a 4-hour clear path. Now, when I see a clear path like that, what do? I drop down to the 1 hour and look for the pausing area. So, my initial resistance. Remember, there's two ways to burn off we got oversold on the 1 hour to 4 hour and everything else. There's two ways. So far, it's a horizontal correction. So far, we have the horizontal correction letting the 4-hour rotation zone catch up. Remember, the two most important rotation zones on this horizontal correction will be the 4-hour and daily. If we get the pop around 39.75 above there, then I'm watching 39.92 to 39.98 and a reconnection with the 4-hour rotation zone. And that's where I'll drop to the 1-hour chart. And look, we got the breakdown zone right there. So that will be any targets above 39.75. I will use intraday for a little bounce correction. Don't get interested into the bigger correction until we start to get a sustained move back above 4K. Everything else would just be a short-term correction, especially with 4-hour cycles so far are turning up, but with only a sideways move, so the bounce might be minimal. That's why I'm really focused on the next rollover play. It's not necessarily more up on inflation. It means for me that there's no more removing inflation suddenly. Especially, you got producer prices, so you still have that component feeding in. The bigger component, as I talked about yesterday with inflation, is the service inflation. And that's why they need to, even though they won't admit it, I think they need to drive this into what they're hoping for is a more mild recession. But we're going to have to get some layoffs to knock out some inflation in services. Now, as long as producer prices hold up, you're not going to see as big a drop in other components of inflation separate from services. So that's where that can get stickier. Lauren is also looking for the bounce to roll over. Mike, do you think the companies like Tesla use stock splits as a hedge because they know the company is overvalued? I think they use it somewhat as a hedge. I think they also use it to gamify the system, and it's not just Tesla. You're seeing it with the other. I'm putting Tesla in the meme stocks because most people don't understand who trade stuff like Tesla, AMC, GME, all this other. And I'm loading it into the overvalued crap stuff. They don't understand. They remember prices. They don't understand market cap even. And I even talked to people. They're like, "Oh, Tesla's now a bargain. It wasn't 1,000. It's now 300. It's a bargain." I'm like, "Yeah, because it's split." They're like, "No, it's going back to 1,000. It's a bargain." They don't even understand the concept of market cap or dilution. So all that still has to get wiped out. They just look at the price. They see it cheaper, so it's buy on cheaper. That's like if you went into the store to buy your box of cereal, they kept they cut the price in half, but they reduced it by half. They'd be like, "Oh, it's cheaper." No, you're getting half as much. It's not cheaper. It's the same exact price because to buy what you had before, you have to buy double. It's literally we have so much ignorance in this market. It's still like yesterday. I need to buy more. I need to buy more because it's a bargain. It's a bargain. It's not. Look at you don't even. And I talk about earnings contractions. People don't understand earnings contractions. You don't have people understanding anything. Even years ago, I think I'm going to go on a little side note because there's not a lot to talk about this morning. I think the Fed being in the markets this long, ever since 2009, roughly, has just stupefied the market. I used to talk to even average people back in even during the .com stuff. People said, "Yeah, this is." You still had your share of idiots out there, but you had more people, more informed investors. Now I even look around to people who should be informed, who've been in markets for years. They don't even understand what a market cap is. They think fundamentals are for are just some study that's obscured right now that don't matter. It's gone completely bonkers. And everything's about, oh, well, the Fed, the Fed, the Fed, the Fed, the Fed, the Fed, they're going to cut, they're not going to tip it into a recession. And every narrative now, even last night, 75, because the one's on the table, 75 is the new pivot. What? It's like the Fed's good. They're not going to tip it in recession. There's one and done still again. It's absolutely absurd. It's absolutely absurd. That's why we're nowhere near a bottom. Josh, yeah, if you want, because you can now. I'm just going to deviate one more. Insightful teaching on the clear path handling with pausing, and a lot of people. I've asked this question before. How does that work with market profile? Clear path is an easy way to spot key things if you don't want to really sit and work on market profile. And since market profiles very good for finding key things and analyzing the type of day it's in and looking for key support resistance areas and other stuff. But a lot of times, if you're following a bunch of markets, you don't have time to do that. So Clear Path can help you identify the key levels without getting into all the in-depth analysis. And it's like 90% there. So it's very handy. Elon was on damage control yesterday, pleading and agreeing with Kathy on deflation, saying that we need 25 basis point. Yeah. Well, because look, Tesla's going to go through a demand crisis. Their demand is drying up, and they've opened 2 new factories. Oh, it's deflationary for him because he's producing too many cars for what people want at too high a price. So he's got to either slash prices or cut it. I mean, his first half Chinese numbers were pretty bad. So from September. And I'm not just going to sit here and pick on Tesla, but that's why he's doing that, because it's deflationary for him. Good morning, Amadeus. Growth recession. Growth recession? I don't think we're going to be in a growth recession. Unless that's what people are thinking. Good morning, Ramsafal. Can we rally to 12.5 this week in the NASDAQ? Well, with that, let's take a look at the NASDAQ Cocoa. Remember, you can also put on, I just don't have them on here. Let me change the color real quick so we can see. Where would be if you did have the stronger snapback rally, my major target would be 12.5. 33 to 12.647, and that would be major. Not expecting that to happen, especially with still the downward cycle pressure, but that's where, if I was going to target, if we did get a sustained rally, 12.5 would be the one of the upper end targets. Right now, again, the breakout play would be above about 12.2 for today, and then 12.276. Declining 4-hour rotation zone. Where am I getting the 12.276 target? Pausing breakdown area on the 1 hour. So you see little clear path, 1 hour pause. Then we have the major clear path from what was hit yesterday. And when you're going into a major clear path like that yesterday, also you're going to look for breakdown zones behind it. However, there aren't many. So that's where I really have to use the harmonics to the upside. And roughly look where that level is, that the 12,276. Then where would I target? The 12,307 to about 12,319 on a more sustained rally. Is this putting in any double pattern? No, it's not. This is a horizontal correction. So far it's a horizontal correction. Watching for the pop for the next rollover play, especially to the 4-hour rotation zone. The Dow, I'll just go through this real quick. 31,400 roughly. Then I'd be focusing on 31,500. Why? The declining 4-hour rotation zone. There's not much pausing area, though, into the Dow until 31.6. So do keep that in mind if we got some upward pressure above 31.5. By the way, also got asked, not on this live stream, but is this a valid double bottom on the Dow? Yes, it is. I should call it a potential because it would have to get a massive rally. But this one is valid because the first two targets are within it. Not expecting it to confirm or trigger, putting it on because you have to be aware of all patterns. Expecting this for a rollover and then a break of here because we should easily still head down to the 30,630 area on the Dow. Russell, key levels breakout for the short-term rollover would be around 1851. Breakdown below 1832. Other than that, I'm not looking at anything. DAX still hasn't closed below 62.5. Still watching this 12,963. If we get below that, then we'll target to 12,733 on any rally. For me, the minor overhead resistance is 13.1. Majors about 13.170 to 13.2. Notes. Hitting the 114.19 harmonic with a slight bounce, but there's no great bottoming pattern yet. So this is just trying to get off again. It got severely beat up. A nice little play up until a correction play, and I'm going to watch for a rollover anywhere with the 4-hour rotation zone between 115.02, which we've already hit a couple times, and 115.13. Dollar index, little pause. The Japanese finance minister trying to talk down the yen, saying they are considering intervening in that, and then they won't let the markets know if they did intervene, possibly. So dollar, that pulling back a little, dollar pulling back, but even on this pullback, gonna watch for, because we closed above the 62.5, so still watching for more strength than a dollar. 110.39, 110.78. This is just a pause area consolidating with the little market rally, so not surprised to see a pullback in the dollar index. VIX, on any pullback, keeping an eye on this low. Sorry, the low from today, 26.35. If we start rallying, won't get in overly bearish until we get above 28.15. Crude, again, we had the talk yesterday about the floor being put in at 80 for the strategic reserves. Can't do anything short-term bullish until we get above 89.50. That would be into a little clear path move, and the target would be about 91.50 for the breakdown zone. For me, other than that, the key support sitting in about 85 right now. Yes, longer term, we still have the longer term bearish pattern. Short term, you have the chatter with the floor from the we're going to refill the strategic petroleum reserve, which, you know what, now that inflation's still running hot and fuel prices, that's not going to take it down by itself. Why don't we just fill this up and we'll let gas prices run higher again, which they should have never been draining the strategic reserve in the first place. So so let's just refill it now, since inflation is going to still run hot and the Fed's going to do what they're going to do going into the midterms. That's my take on it. Do I think Tesla intrinsic value is, yeah, it was substantially below 100 at this point after the split. They're increasing the cereal price while putting less in the box, and that is true. Andrea, welcome, welcome, welcome. Thank you, Mike. I'd like to hear rants like this and keep me in check on what is real and not. Is there so much noise out there that makes confusing as a new trader? And that is true. And that's why I also do sort of boots on the ground checks, because it helps me gauge stuff. I think of things in a certain way, but I want to look. It's why I read a lot of information. I like to gather information because it prevents me from getting a scotoma and getting blind to where we really sit. It's why you also can't get blinded to being overly bullish or bearish in especially a short-term market, because then you won't analyze price action properly. Like I could say on crude, above 89.50 is a short-term bullish play, even though long-term I'm bearish still. Let's just glance at a couple more things. What I was talking about with the Japanese yen. We do have a potential double top. It would need a daily close below 141.50. It is against the daily rotation zone also, so slightly lower probability. But this pullback is based off them trying to, I think they're trying to jawbone it lower before they have to intervene. Euro with the pause in the dollar, just a consolidation. I'm watching still for another push in the euro. Bitcoin, just another consolidation. Same analysis as on the NASDAQ. Any plays to the upside would be a return to the 4-hour rotation zone. 2066. 2812 to about 21,000. Tesla, if we start breaking above the high from yesterday's an early warning sign, but the high from the sorry, I'm on the 4-hour. Yesterday's high of 297.40, then I'll start watching for the gap harmonic fill. Other than that, my next downside target, 285. Where do we sit? I can't answer every question. After watching you for 10 months, am right, the clear path is based against the candles immediately to the left. Yes, it is. True statement. If Germany rations energy, Giga Berlin could be in trouble. Powell's aiming for a growth recession. Oh, you're talking Powell? I guess you could put it like that, or a very mild recession. PPI came out this morning, John, at 7:30 Central. Dark screen, ask me that after the close today, please. Yeah, the dark bear market is great trading all around. Will pay huge dividends in the next bull market for the survivors. And that's why at some point there will be great plays to get in long-term plays where we don't have to look. There'll be pullbacks, there'll be everything, but it'll be like, all right, that's when it gets easy. Then it's really just fine-tuning strategies and like, all right, if I want, all right, selling into a rally, do I want to do some covered calls on this? Hey, we're getting a dip. Do I want to do some cash secured puts to even play it in a different way other than just buying shares? Spiders, slight gap up. If we roll over in the futures, just watch for the gap fill. Other than that, spiders, I'd be paying attention right now, even with just the 1-hour rotation zone before the 4-hour. And above this right now we're 394.35, just above the 75. I'd be paying attention to about 396.20 to 397 area for key resistance. So that's about it. And the Qs, again, if we roll over, it's going to be the gap fill play to yesterday's close. The Qs, major resistance 295. 92 to 296. Then my next area for the Qs on a continued rally would be about 296.75 to 297.50. All right, we'll have to get to some more. Yep, they approved the Elon's buyout. You're asking logical questions based off of Tesla. You know, people still think he's going to wiggle out of it. We're going to have to see what the court decides in October. I don't think they're going to if they let him wiggle out of it, the M&A M&As are going to get turned on their head, and Delaware is going to lose a bunch of their sort of credibility for their corporate governance. So it'll be very interesting. Anything else? Where do I think? I'm not even going to answer that question. That's an inane question. It'll be higher than where it is now. Where do I think the spider could be in 30 years? That's actually, you tell me where it's going to be in 5 years. I think it's going to be higher than where it is now. There's the open. Let me just peek at the S&P. 30 years, it's going to be higher than where it is now. Potential, no, it's not a double bottom on the 4 hour. This is a side horizontal correction. You can't treat this as a double bottom. It's fine-tune it on the 1 hour. You see 1, 2, 3. Just, it would be a horizontal breakout sterling above 39.75. But remember, I would not be personally not looking to be super aggressive unless we break out. If we break down below yesterday's lows with confirming tick, with confirming negative bias, I will be more aggressive to the downside. To the upside, again, we can stay even right here. You know, this is a tough upside market to trade into. Yeah, Elon might need to sell stock. I agree. If it's ruled that he does have to do it, he will need to sell some more Tesla. But that's not going to prevent people from still jumping in every day to buy it. Ask me that after the close. Martinez, please come back. I'll be back at 3:30 Central Time, and we can look at some more stocks then. I got to jump to work on some stuff at the open. Again, see, even on this 5-minute, 15-minute, you have a somewhat of an advanced clear path. Just giving you some more information going into the open because there's nothing I need to do for the next couple minutes. But you don't even have you got a lot of stopping points. You got a lot of overhead resistance. So even on pop rallies, be very careful because there's not much. You have more of a clear path to downside from this little stuff. But if we start breaking below about 39.54, we could easily retest this 39.43. That's the play I'm going to be watching for in about a couple minutes with and then see how it reacts down here with the lows from yesterday if we do get that breakdown play. But we have some emotionality around this 39.54 level. Yeah, please do like the video with that. Thank you for being here. Don't get caught off guard. And if we're not seeing anything strongly trend-wise, which we may not, don't, that's where I use more aggressive targets, more aggressive stops, and watch for choppier price action. So don't get blindsided by the choppier price action. Bye for now.